All right, welcome back. Sorry, it's pretty hot in Marbella, so I'm just t-shirtless. But it's not the point, right? The point is continuing lifestyle design videos, and this is lesson two, the new shift: assets that work for you. Because if you come from a standard life approach where you are working for the money, this shift can seem and can look a bit overwhelming. So, like, how can assets work for me and generate income for me rather than me doing something for the money? So, throughout these 10 bullet points, I will explain this perception, this mindset shift towards the fact that yes, assets can work for you. So, first of all, traditional jobs, they trade hours for money, which is which gives two problems. The money you can generate are limited, and all of that process is really exhausting. So, limitation comes from the fact that, for example, you are earning 7 euros an hour, and that's your limitation. So you cannot earn 7.5 or 8 euros per hour at any given point if your fixed salary sits at 7 euros per hour. So basically, you are trading yourself, your time, you being alive for those 7 euros an hour. And the second problem, because you are doing that for at least, usually at least 8 hours a day. So from 24 hours, about 8 hour goes to sleep and 8 hour goes to work, trading yourself, you being alive for those 7 euros an hour or whatever else it may be. It, it could be 5K an hour, doesn't matter. But that leaves you exhausted at the end of your shift, which also creates a problem that you're not too much interested in learning new things, exploring opportunities, etc., because essentially at the end of your shift, all you want to do is go home to your family, friends, whatever, just you yourself, sit down and just relax, right? So a traditional system and traditional jobs leave you limited and exhausted. Now, in DeFi, your capital earns you even when you sleep. It doesn't matter, right? It's like a 24/7. There are no holidays in crypto space, in DeFi space. On Christmas, you are earning money. On New Year's Eve, you are earning money. On any kind of, sorry about that, on any kind of occasion, you are earning money. Any time zone, doesn't matter, right? So you allocate capital, so you are earning, your money is earning for you. So you are no longer trading yourself for the money being involved in the economical activity, right? It generates you additional money. So this is the first narrative shift. You no longer trade yourself, your aliveness for the money. What you have, your current savings, so to speak, you put into the economical systems that run itself off and generate you additional money. Number three, passive income flows creates compounding effects over time. So this is very important. In DeFi, it doesn't matter. It doesn't matter the amounts of money you start with, because most young people maybe starting with just a few hundred, maybe even a $50, 50 euros, doesn't matter. Maybe you're starting with 50K, right? It doesn't matter. But what's matter is that at first, when you are just getting started, when you are opening the pools, depending on your risk approach, but you should always have at least one extremely safe pool with very big range, safe assets, and just run it. The yield will be low, but you will be constantly generating the cash flow, right? So At first, it may seem like even with a small amount of money that it's not worth it. You put in 500 euros, you are earning 4 euros a day, maybe 5 euros a day, and it may seem like it's not worth it, right? Because you can put 500 into casino, a meme coin, into a funded, a trading account, all of that nonsense and stuff, and you could be making more. But that you could be making more means that you will be involved in a lot of guesswork trading. I mean, a traditional markets, forex, all of that, a funded account bullshit, all of the meme coins, gambling, everything. It involves essentially luck and guesswork. While in DeFi, it involves a bit of a strategic approach. It's not purely luck or guesswork. You allocate capital professionally, you will be generating cash flow no matter what, right? The size of a cash flow and the yield you're getting, that's dependent on something we cannot control, which is volumes, like trading volumes and user behavior. But no matter the volume, you are still getting something, right? So over time, if you constantly compound, if you get the money, the yield you generate, and you compound it back into the pools, you will notice fairly quickly within weeks that you are now making way more, and what you used to make throughout the day you are now making in half a day, essentially within a few hours, and then eventually within a few minutes. So this is very important to understand that at first, even if you think that it's not worth it, it actually is. Number 4, let me quickly get my coffee. The new rich, so to speak, the new rich. So we have the old money, right? People coming from businesses, from physical businesses, restaurants, hotels, stocks, investments, etc. Those people, they look at us weirdly because they don't understand this new approach, this new era of internet capital market, so to speak. So the new rich focus on owning system, not working harder. Before, the old money guys, etc., they will usually give you this advice: just work hard, right? Work hard. That's their usual advice. Invest and work hard. But the new rich, the people coming from e-commerce, the people coming from crypto or volatile stock investments, all of that kind of people, right? Because we now have better access to capital than ever before. You can actually just work for a few months in most European countries, get yourself a mortgage, buy a house, rent it out, keep it for a few months, keep that house as a collateral again, and just remortgage it to a new house. And you can do that, and you can become pretty much a millionaire on paper just within a few years if you want to go that path, right? So the new rich, this is the new rich, so to speak. So those people are focusing on owning systems that generate income. And it's not necessarily involves working harder or working long hours. In DeFi, if you allocate enough capital, you are pretty much just you're gonna spend 5 to 10 minutes a day just checking things out, going through the pools, going through the charts, and if in case you need to modify something, adjust something, it will take you another 5 minutes. But you are essentially owning a system that generates you income, right? So you are not working very hard. You are not like glued to the screen, always checking something, writing something, doing something. You basically own a system that generates that. So this is not just about DeFi. This is in general about even those e-commerce, drop shippers, online businesses, agencies, all of that stuff. Essentially, what they do, they own a system, a playbook, so to speak, that generates income rather than those people working extremely hard. So this is also a very important narrative shift that you have to get. Number 5, small amounts of yield reinvested grow into exponential results, very similar to compounding point, right? Even small amounts, even if you generate 50 cents a day from $25 investment, doesn't matter. But if you build a structure, a routine, You claim the yield, right? You claim the yield, you reinvest. You claim the yield, you reinvest. It will grow into exponential results, massive increase. So at first, right? Let me try to draw. At first, so you have the money, right? Like that. So you claim the yield, you reinvest, 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 reinvest. Nothing happens. But essentially, your reinvestments will become a bit higher, higher, and then you're gonna notice exponential growth because you will be reinvesting higher and higher amounts every single day. So that can double, triple, quadruple very quickly, right? So this is important to understand. And this applies to anything, not just DeFi investments. Number six, learn to think of money as employees working for you, right? This is very, very important. DeFi should be as a business for you. And we will have a separate topic on DeFi as a business. But you have to think of money as employees working for you, right? The whole systems, all of that, liquidity pools, everything is working for you, right? So when you have money invested and that money is working for you, so you basically have a business, which is the amount of money, and that money act as employees that they are working for you. They're working really hard, nonstop, 24/7, 365. They're working to bring you more money. If you experience losses or something, that's okay. It happens even in business, right? Not all DeFi pools invested will be forever profitable. Sometimes unexpected happens in the market. Market drops massively, right? Black swan events, whatever, and basically you're kept with a bag of coins. If especially if it was some sort of a volatile degen pool or something, and you are down 80% and the fees are not covering, you're out of range and you just don't know what to do. Even in that case, you have options still to recover, but it's going to take a long time. So the same is in business, right? Not every product is going to be top selling. Not every um, business itself is going to be successful. But as long as you keep trying, as long as you keep on going, you will hit a winner and you will eventually build a structure, a playbook, so you will understand what's happening. So the same thing applies to money. Money are employees working for you, right? When you spend money, this could be you firing people from your company, so to speak, right? As a uh, symbolism, or you just having business expenses. It just all makes sense. Number seven, if your assets don't generate income, you are still stuck in the old model module model, right? Because owning assets is step one. It's good. If you own assets rather than holding cash, it's already a first step, which is very good. You are already doing better than the big majority of people, especially if you are in Europe. If you own assets rather than euros, you are already ahead of the majority of the majority. Because in Europe, I don't know why, probably due to pretty difficult living conditions and pretty annoying financial education that is non-existent, um, people don't tend to like investing even in anything. Even the in the European stock market is not as good in comparison to the US, but people just don't tend to like investing for any reason, no matter the age, especially young people. Young people these days in Europe, they just like vaping and spending money, spending, and then asking for more and spending, and they are pretty lazy and they don't want to work. So DeFi investments and capital working for them is they're pretty much the only way to grow out of all of this old system, right? So owning assets is good, but your assets needs to be generating you income. So if you own a house, that's good, but if you are not renting it out, if it's not you living in it, it's bad. So you have to generate income. The same thing applies to your stocks portfolios, to your ETFs, to your I don't know, cryptos. DeFi is of course, but I'm still trying to find alternatives. This could be peer-to-peer loans. This could be um, real estate investments where you are part owner of a house and you're getting yield for renting. All of that stuff. Essentially, any kind of asset that is besides the cash needs to generate you income. In worst case scenario, if you just have cash, at least have it in lending protocols so you are still earning interest, right? Number 8, holding without yield is equals to missed opportunities, which is pretty similar to number 7, right? But this applies specifically to crypto. If you are just holding your cryptos in wallet, that's good. That's at least something, right? And most people are just holding in ledgers, trezors, any kind of cold wallets, hardware wallets, doesn't matter. But if you're just holding, you are missing on a lot and a lot of opportunities. Uh, I mean, incredible amounts of opportunities. I'm not saying that you have to always risk in protocols all of your holdings, but at least part of it, and a pretty big part of it, at least I would say half of your holdings, you can actually hold in the safest, biggest DeFi protocols, borrow against them, and just generate income. Always get the yield. You have to be earning the yield no matter what, no matter how small. But you consistently getting the yield will put you in a right mindset that it's possible that you are making something, right? So that's very important. And these days, biggest DeFi protocols, they have more money than most of the banks. I mean, those smaller commercial banks, for example, Aave, they have billions and billions in TVL. Most banks, like small countries, commercial banks, they don't even have assets worth billions. So Aave is definitely a good place for most of the biggest assets to deploy and just borrow against them and earn some yield, right? Number 9, DeFi allows you to design cash flow systems without the middleman, which is also a new shift, a new narrative, right? Before, in order for you to invest into stocks, into crypto, into anything, right? You used to have, and still, I mean, this still exists, but at least DeFi allows now, step by step, the change of that, which is there are no more middlemen. You lending your money, you borrowing money, you doing what you want to do with your money, sorry, in DeFi. There are no middlemen. It's just you and the opposite side. That's it. So if you are lending, there is someone wants to borrow, right? Simple as that. If you are swapping between assets, if you are investing, buying something, it's you versus the opposite side. There are no more middlemen taking the fee, taking the cut. For example, you investing into stocks through your bank, they will take enormous fees, right? Enormous fees, especially in Europe and smaller capitals, enormous fees, right? In DeFi, even today, already you can buy stocks. Not all of them, of course, but slowly it's happening. You can buy stocks by clicking swap between USDC, between Solana, anything to stocks. Tesla, Google, Apple, S&P 500, doesn't matter, right? Right away, just swap it and you have it. No middleman, no big fees, nothing, right? And even some brokers right now, they're building this fee free, so to speak, systems where you can actually just go ahead and buy stocks, whatever. So DeFi really allows you to design these cash flow systems yourself because you are in control. There are no banks restricting something, no banks pushing you for documents, for legalities, anything. It doesn't matter. So it's very, very cool. And number 10, your goal is freedom through self sustaining digital assets. This is also extremely important because your end goal with DeFi, with investments, anything, right? is to be free financially through the self-sustaining digital assets. And what it means that your assets, they're always always participating in the economical modules, right? Always generating yield, and they are not static assets as well, meaning that the assets that you are owning and letting to participate in economical activities are also moving and volatile. So basically, anything that is not stable coins and stuff could be considered as a self-sustaining digital asset. You don't have to monitor it all the time. For example, in real estate, you have to monitor the house, right? Always. If you're renting it out, you have to fix it, you have to maintain it, etc., etc. In crypto, in digital space, in DeFi, you want to own pools and assets that are self-sustaining, so you don't have to always coming back and rewatch it, monitor, maintain it, right? So DeFi definitely is that place where you have a bundle of assets. That bundle is participating in the economical DeFi activities, trading in yielding, lending, borrowing, doesn't matter anything, right? And basically they're self-sustaining, so they generate yield. You just come back from time to time, you harvest the yield, you get the money, and you leave, and you just do what you have to do. You're fully free. Then you come back again, you get the yield again, etc. Maybe sometimes you have to micromanage something, like rebalance the pool, check the asset prices, etc., right? But in most cases it should be self-sustaining. Yeah, it's a financial sovereignty, so to speak. You make your money, wave your money, right? And it's self-sustaining. So these are the 10 points about this new mindset shift, this new whole understanding that, look, your assets should be working for you. So hopefully you will get some interesting points that will keep you thinking, like, okay, that was nice, okay, that was beneficial, etc., etc. And slowly, lesson by lesson, you will be understanding this narrative shift more and more and more. So thank you guys for watching this one, and I will see you on the next one.